Traders are saying that the decline that we're seeing in global stock markets could go either way for the Kenyan bourse. Some are saying that they could see Africa and perhaps Kenya as an alternative, possibly even safe haven investment, or they could be looking to reduce their liquidity to emerging market funds like the Kenyan bourse. How do you expect the global scene to play out for Kenya's market today?
Well, there are a myriad of factors which must be considered and which may in turn affect how investment takes place in this country. Kenya still has a lot of potential as an investment hub, but looking at the international factors, we have the most critical being the oil factor. Kenya is heavily dependent on oil as a source of energy. We have a shaky energy policy, and as the international oil prices rise, this does affect us. We also have the war in the northern part of Africa affecting oil supply, which in turn affects the currency, the dollar and the shilling. So I think these factors come into play, but then the undertow to this is that there's a lot of foreign direct investments because people see, foreigners see that Kenya is a place to invest cheap because with the foreign currencies, they can afford to get quite ahead in the local market.
We have seen foreign investors' appetite for Kenyan stocks slip off, particularly on Friday, though. So even though stocks are cheap in Kenya, it seems the foreigners are staying away.
Yes, and that's exactly what I just said earlier. We have, if you are to take, for instance, foreign direct investment has gone up because for every dollar you get more shillings now that the currency is weakening, meaning you can actually pump in more money as a foreigner. And I think that's what foreigners are looking to exploit at this moment. And we also have quite a number of stocks trading at discounts on the Nairobi Stock Exchange, and they also wish to capitalize on this discount and take positions for the short term.
You mentioned one of the key issues you're seeing at the moment is the issue around power. We know that Kenya Power has indicated they've embarked on power rationing as a result of that drought and the impact on reservoir levels, and as a result, hydropower. Have companies in Kenya now come out saying that it started affecting production at all?
Yes, and that is the sad bit of it. Being an oil-dependent economy, where our import bill is 25% plus oil products, and being so heavily dependent on hydroelectric power, we find ourselves with a myriad of problems when it comes to energy. And we have the manufacturers coming out saying this has increased their energy costs. They use their work is electricity intensive. We have the cementers, we have people like Crown Badger, we have so many companies who are involved in direct manufacturing complaining about this. We also have hospitals saying that the power interruptions has affected their schedules.
Let's talk
so
about,
it is a problem.
Let's talk about one of those cement companies highly dependent on the cost of power. Athi River Mining results out this morning. A strong set of results there, largely expected by the market though. If you just look at turnover, up 30%, earnings per share up by around 27%, 8 shillings 92 cents. That company's increased capacity, but of course concern going forward now will be the rising input costs as a result of power.
Yes, and it's really a commendable balance sheet, if you ask me. Profit before tax should be a bit over 600 million shillings. That's about 23% higher than what they had the last time. We have their turnover up by 30%, which is good. And for this to be presented in an industry that's highly competitive, I would say they have really gone a long way in reducing their operation costs. And they may have to focus more on alternative sources of energy if this energy problem spirals off a tangent.
And the company is also planning on adding around 1.5 million tons of cement through its Dar es Salaam plant there. And of course, that will help it capitalize on the growth opportunities in the region. This should only bode well for a company like Athi River Mining.
Yes, I think that will be a shot in the arm for them. We also have, they still have a grip on their fertilizer wing, which may put in some more revenue into their operations. But then again, I think they should also focus more on streamlining their operations. They may not want to fall into the demise of their peers. We had East African Portland Cement a few months ago really suffer because of the yen-denominated loans they had taken. So they must also consider the economic situation, currency, and also how they could reduce the operating costs.
Now, Kenya has cut its growth forecast for horticultural export earnings this year to 8% from 15%. That's due to the debt crisis in Europe, the issues that the US economy is facing. So the global slowdown is really going to affect Kenya in a key export earner. Coupled with this, we've had the drought and lower yields for agricultural exporters. Are you someone that plays in the agricultural stocks?
The agricultural stocks are what we call cyclical stocks. They are very dicey when it comes to returns. The risk premium is usually very unpredictable. And when we look at the situation in the country, we have the looming drought, which has reduced yields for most of these companies that deal in floriculture, horticulture, and even food crops. So that is a factor. Another factor which may play to the favor of the exporters is the weakening shilling, but how far can that go is another question. So looking at the agricultural stocks, I would rather take a risk-averse position or a long-term position.
Speaking to a trader on Friday, he was saying that he's still bullish on the growth story of companies like Athi River Mining, Kenyan, and he's going growth story over being defensive. What is your stance at this stage?
I think that is a good way of looking at it. Those two companies in their own right are very well established. Looking at, we already spoke of Athi River Mining, the demand for housing is skewed and the supply is just too little. So they have a lot of room for growth in construction, which is their core business. Looking at Kenyan, it's in the energy sector. They may have challenges with the government, Energy Regulatory Committee, the Ministry of Energy, which are all being sorted, but all the same, their half-year results were commendable. In spite of making enormous turnover of 83 billion shillings, they only made 2.7 billion in terms of profit, which may be a concern. But looking forward, those are two counters I would pick myself.